Hello student, how are you all? I am fine. So today in Nbse classes, I will I will show the entries which will be posted in the trading account, profit and loss account and balance sheet from final account chapter of class 10. So here is the format. On that day also I explained the format, but now today I will show you the entries which will be there or the posting. Okay. So now this is the expense side, this is the income side of manufacturing unit. That is related to direct income and expense of a company. Direct expense income means the expenses or the income which is related to the manufacturing. Okay. So now opening stock. The first entry for the trading account will be opening stock. Opening stock means the stock which was left last year, and when we open our factory in new year or the first date of the year, that is become the opening stock. Then purchases of new stock. Here stock means the raw materials. Then return of stock. Sometimes some product came which was wasted, then we return it back. So we deduct from the purchase. Then wages. Wages means the daily wages which you give to the people who work daily per day work for our company. Then carriage inward, freight inward, manufacturing expenses, fuel and power, factory expenses. So these are the entries. So here inward means related to purchase. Okay. If we are inward, then we will got also outward, which will be posted in the profit and loss account. Okay. So here inward means carriage for purchase, freight for purchase, and manufacturing expenses directly to manufacturing expenses. So no need to explain anything. This is a manufacturing column. And fuel and power. This is the expense related to work with the machines to produce the goods. Then the factory expenses, the expenses which is related to the factory. So it will also come. Then in the credit side, the first entry will be sale, and here you will get this 4 entry only. This is not mandatory. This one is also not mandatory. That the gross profit. I will explain later. So now sale. Why sale is in the credit side? Because after we manufacture, the direct come is our sale. So sale is directly related to manufacturing income. Then return. Sometime what happen, if we sell something, then there are also some bad product occur. Then the purchaser, what he done, he return or she return the goods. When they will return us the goods, then we will directly deduct from the sale. Suppose our total sale is 5,000, returning goods is 3,000. So overall sale is only 2,000. Okay. Now the closing stock. Why closing stock is the income? The closing stock is the income because next year we no need to purchase a new stock. So this is our income for this year. Suppose we purchase a stock for 90,000 and we manufacture goods for 80,000. The 10,000 stock which is left with us, this is called the closing stock. And closing stock is double entry. I will show later. Then except gross loss and gross profit, we will calculate the both sides. Suppose the total of this side is increase more and this side is less, then you have to deduct this side from this side. Means the credit side is more and the debit side is less. If the credit side is more, and then suppose the credit side is 30,000, suppose, and our debit side is 15,000. Okay, so the difference or the balance will be 15,000. So this is the income side. Income side more, expense side less means our gross profit. And if it alter, the expense side is more and the income side is less, then it will be our gross loss. This is not the net, this is the gross. So this is the overview on trading account. So now I will solve or I will show you the profit and loss account. Students, this is the format of profit and loss account and the entries which will come in profit and loss account format. So profit and loss account deal with the indirect expenses, the expenses of office, not the factory. So the expenses or the income which we deal in out of the factory or the out of manufacturing is called the indirect expenses or indirect income. So as you know, this is based on nominal account. So debit side will be the expense and the credit side will be the gain. So here, the first of all, we have to write gross profit and gross loss of trading account. If you got the gross profit which you wrote on the debit side, it will be posted in the credit side of the profit and loss account. And if you got the gross loss, that will be in credit side, it will be posted in the debit side of the profit and loss account. So this is the rule. Okay. Then the first entry of the debit side, it should be salaries. You will start from salaries, but you have to keep some space at the time of practical, because first of all we will not know whether it will be gross loss or gross profit. So here also, and in debit side also and in credit side also, you have to keep some spaces. Okay, so in the debit side you have to start with salaries, and in credit side it's up to you that you will the entry which will come, you have to go like this only. So now in debit side there will be many more items. Many more means what? The expenses which is not related to the manufacturing unit or the direct expenses, it will automatically come in the profit and loss account. Example: salaries, discount allowed, office expenses, rent, rate and taxes, bad debt. Now what is bad debt? Bad debt means the customers who purchased the goods but didn't pay the amount. Okay. Then insurance paid, advertisement, commission allowed, etc. Here etc. may be the general expenses. Then many more items which will come in to you, that the trade discount, cash discount, all the expenses which will be not related to the manufacturing unit or the direct expenses, you will automatically put in debit side of profit and loss account. Debit side of profit and loss account. So in the credit side now, credit is the income area. So in income area, you have to write the discount received, then commission received or commission earned, then interest received, rent received. Then there will be many more items if you get. Now you have to, as same as the trading account, you have to do the calculation. Here, by doing the calculation, if this side is more, that means the credit side is more and debit side is less, then it will be our net profit. And if the debit side is more, that the expense area is more and the income area is less, then it will be our net loss, which we will post it to the capital account. So what is the capital or capital account? We will discuss in balance sheet. So this is the format of balance sheet, and here you will be get liabilities and assets. There will be no debit side, no credit side, only liabilities and assets. And balance sheet, it will be created as well, that means the particular date of year ending. Here in liability side, you have to mention all the entries which we didn't pay, we have to pay in future, we liable to pay. The amount will be in liability side. And here in the asset side, the amount or the entries maximum which we have or which will get in future. Suppose in liabilities there will be sundry creditor. Creditor means the person to whom we have to pay the money. Money means what? We have purchased something but in credit, so they are our creditor. Then bank overdraft. Bank overdraft means when any businessman withdraw more than the balance in the bank account, it called bank overdraft. The amount which we withdraw more than our balance in account, it called the bank overdraft. It will be in liability side. You have liable to pay. So then bills payable. Bills payable means bills of exchange. There are some bills which the company have to pay. Here bills means there are some contract for 3 months, 4 months or a year, that I purchase some goods. So this is the amount I will pay after 1 year. So we have to make a bill or a contract. So the amount which we have payable after in terms of bill, this is called the bill payable. Then any long-term loans. The loans which we took for more than 1 year, they are called long-term loans. Then the capital. Okay, now from the amount of capital we have to deduct drawing. So what is drawing? Drawing means the amount which owner withdraw from or took out from the amount of capital for the private use, not for the company use. That's called the drawing. Then income tax. The income tax, it will deduct from the capital only. Then the net profit or net loss which you will get on the profit and loss account, here you have to deduct and add. The net profit you have to add with capital, the net loss you have to deduct from the capital. Then the amount. In asset side, cash at bank, the cash which you have at bank. Then cash in hand. Then sundry debtor. So who are the sundry debtor? Sundry debtor are the person from whom we will get the amount. Suppose we sold some product and he or she didn't pay us the amount, so they are called the sundry debtor. And the debtor who didn't pay the amount and forgot to pay or run away, they call the bad debt, which is included in the profit and loss account debit side. So bad debt come from the debtor only. The debtor, those who didn't pay the amount for long period of time, we declare his or herself as a bad debt. Okay. Now bill receivable. as bill payable, there's a bill receivable from whom we will receive the amount. So this is the, then after bill receivable, it will be the closing stock. So closing stock will have the double entry. One will be in trading account credit side, another will be in asset. Why asset? The stock which is left at the end of the year, it is an asset. You can sell it or you can reuse it, right? So it will be in asset side. Then investment. Loans means from whom we took the loan. Investment means in some project, if we invest something for a long period of time, it's called an investment. It will be your asset. Then plant and machinery, furniture, motor car, building. So these are all the fixed assets. So fixed asset will be in the end. Before it will be the current asset, then investment, then fixed asset. Current asset means the amount which fluctuates day by day. Current liability, the amount which fluctuates day by day. Then long term, then the area of capital. Here also, first we will add with the current asset, then investment section, then the fixed asset section. After adding all the amount of liability and asset, it should be equal. This is not like the profit and loss account and trading account where you will balance the amount. The liability side and the asset side of the company should be equal. Okay, and if it is not equal, then you have done wrong. Students, so this is a video for you all. Hope you all understand this video, and please share, subscribe and press the bell icon for further notification. And if there are any problem with this account, please comment in the comment section. Thank you, students.